The banks are lying to you. In this video, I'm going to go and expose the truth behind what your bankers and mortgage brokers are not telling you about refinance home mortgage. Hey, what's going on, everyone? This is Sam Kwok here, one of the Kwok brothers, and in this video, I'm going to go and expose some truth about refinance home mortgage and what the true cost of refinancing your mortgage actually is. Now, before we get into the video, be sure to subscribe to our channel if you want to learn more about paying off your mortgage while saving money on your interest. Now, you may have been approached by a banker or a mortgage broker that may have offered you a refinancing mortgage, and they may tell you that you can save money by refinancing to a lower rate, or they may have a special discount program. Well, I'm here to tell you guys that refinancing your mortgage could end up costing you more money in the long haul than the short term. You see, it might look like you're saving money by switching to a lower rate, but what they don't tell you is how amortization works, which is the math behind how mortgages calculate the interest payments. And no, I'm not a mortgage broker, I'm not a banker, I'm just some random guy on YouTube that wants to expose the truth behind the refinance home mortgage industry. So what I'm gonna do is I'm gonna illustrate it on my whiteboard what actually happens when you go and refinance your mortgage. But first, we have to understand how mortgages work in the first place. So what I'm drawing here for you guys is called an amortization chart. And this horizontal line that goes from left to right represents the amount of year that you spend on paying off your mortgage. So if you have a 30-year fixed, obviously right here is the 0-year mark. And on the far right side is the 30-year mark, which is when you actually get to pay off the mortgage. Now, this vertical line, the line that goes from top to bottom, represents the amount of monthly payment that you pay on a given month. So let's say, for example, your monthly payment is $1,000 a month. And I know a lot of you guys may pay more, may pay less. Let's just stick with an example of $1,000 a month. Now, I'm going to use red to draw out the proportionate amount of interest you pay over time. So you can see that as soon as you get this mortgage, vast majority of your monthly payment is actually going towards interest. So this right here is interest, okay? And as you progress and as you start to pay off more and more, you actually get to pick up more principal payment over time. So when you get to past the halfway mark, depending on the interest rate you have, you'll actually end up paying more principal with your monthly payment each month. But in the beginning portion of your mortgage, let's say you just got your mortgage yesterday, vast majority of your monthly payment is going towards interest. Now, the technical term for this is called front-loaded interest zone. So this zone right here, right? This represents the front-loaded interest because vast majority of the interest is being paid up front of the mortgage life cycle. So vast majority of your monthly payment right now, if you just got your mortgage, is going towards the pocket of the banks. Now, this is all fine and dandy if we can make it to the 30-year mark and pay off our mortgage completely, but because of the current socio-economical culture shift, vast majority of the Americans today are either moving or they're refinancing every 7 to 10 years. So every 7 to 10 years, you either sell the house and you move to a different area for a job relocation, or you're downsizing, or maybe your kids are moving and you want to follow them to a new city or a new area, or you again, get approached by a mortgage broker or a banker to persuade you to go and refinance your home mortgage. So about 7 to 10 year mark, okay, is when typically most Americans today will sell their home or refinance. So what happens to your mortgage when you sell your house? Well, vast majority of people don't understand this, so what they do is that they reset, they go back to the beginning portion of their mortgage, get another 30-year fixed mortgage, and what happens is they go back into the front-loaded interest zone. So when they make it to the 7-year 10 mark, that's just when they're getting to start paying the principal payment, but guess what? They just sold their home, got another 30-year mortgage, now they're starting all over. And the problem is that they haven't even spent enough time building up the equity, the principal portion of the mortgage, because they moved out or sold their home too quickly. So when you go and refinance, even at a lower rate, back to a 30-year fix, you go back to the front-loaded interest zone where bulk of your monthly payment is going back to the interest and your contribution to the principal is now limited unless you do extra payment. Now, I do have another YouTube video where I show you why extra payments to the mortgage is actually risky versus another strategy that I teach here in the YouTube channel. So stick around if you want to learn more about the strategy. Now, even worse, I met individuals that make it to their 20-year mark, and because they need the money, they refinance back into a 30-year fix, and all the progress that they made from here to here has been lost and they have to go back to this front-loaded interest zone. Even if you go and get a 20-year amortization or a 15-year amortization, the front-loaded interest zone still applies, because the amortization schedule does rely on how seasoned the mortgage is to get to the point where you're at this part of the mortgage payoff schedule to have most of your mortgage payment go towards the principal payment. So before you go and refinance your mortgage, even to a lower rate, do consider the fact that you may actually end up paying more interest over time because you're resetting yourself back into the front-loaded interest zone. Even worse, some of you guys are going to end up paying large closing costs, anywhere between $5,000 to $7,000, just to go back and reset your home mortgage. And what bankers and mortgage brokers often do is they tell you that you can save money on the monthly payment. Now, they'll tell you that when you get to this point and if you refinance, they may be able to get your $1,000 payment every month down to maybe $900 a month. And unfortunately, most uneducated people in the financial world often see that number and say, hey, I'm saving $100 a month, but they don't necessarily see the big picture of what they're actually going to end up paying as far as the interest payment goes when they refinance their home mortgage. So before you go refinance your home mortgage, look at the amortization chart and look at what's called the effective interest amount. A lot of people shop interest rates when they should be looking at how much interest they're going to pay at the end of the 30-year cycle. Because a lower rate doesn't always translate to automatic saving. Think of it this way: if you had a 50-year loan at 1% interest rate, you're going to end up paying more interest than a 5% loan on a 15-year amortization. So interest rate isn't necessarily everything, it also has to do with the timing as well as how amortization works. Now, if you guys want to learn a better strategy that doesn't involve in refinancing your home mortgage and you can still save money on your interest, I have a strategy that you guys can go check out to learn how to pay off your mortgage within 5 to 7 years on average without making more money, cutting back on your expenses, or having to refinance your home mortgage. Even better, this strategy can also help you protect yourself from a possible recession coming up in the next 10 years. So if you guys are wondering what this strategy is, I'm going to go and leave the link down below for another YouTube video that I made to explain how that strategy works. So what do you guys think? Do you want to still refinance your mortgage? Or do you want to look at alternatives such as the strategy that I just described? I want to hear your thoughts, so go and leave your comments down below. If you still want to refinance, tell me why, and I would love to have a conversation with you. But if I convinced you not to refinance your home mortgage, go ahead and comment down below what your epiphanies were and go and smash that like button. Over the next few weeks, I'm definitely going to be releasing more videos on mortgage payoff strategies as well as ways to save money on your interest, so be sure to subscribe to our channel, and I'll see you guys in another video.